The average Australian financial advisor charges somewhere between $3,000 and $5,000 a year for ongoing advice. Some charge more, a lot more. And what are most of them actually doing for that money? Running your portfolio through a software platform, rebalancing once or twice a year, and sending you a statement of advice that reads like it was written by a legal team trying to avoid being sued, which, to be fair, it probably was. Now here's the part that should make you genuinely angry. That software platform they're using, you can access something just as powerful, arguably more powerful, for about $30 a month. No advisor, no commission, no conflict of interest, just you. A tool that was built for professional traders and the information you were never supposed to have. That tool is TradingView. And if you've never heard of it, that's not an accident. Let's be really clear about what we're talking about here. TradingView is a charting and analysis platform used by retail investors, hedge fund analysts, and professional traders all over the world. It has over 50 million users globally. It pulls live data from the ASX, international markets, crypto, forex, commodities, basically everything. And its paid tier, which is where the real power sits, costs around $30 Australian a month. Less than a streaming service, less than a tank of fuel. Meanwhile, the financial advice industry in Australia manages roughly $3 trillion in assets. That's 3 with 12 zeros behind it. And the dirty secret at the centre of that industry is that most of the analysis underpinning those managed portfolios isn't coming from some genius in a suit. It's coming from platforms like this one. The advisor is often just the interface. The expensive, commission-earning, conflict of interest having interface between you and information you could access yourself. Now, before anyone gets twitchy, this isn't financial advice. Hidden yield doesn't do that. What this is a breakdown of a tool, how it works, what it shows you, and how ordinary Australians are using it to make better, more informed decisions about their own money. What you do with that information is entirely up to you. So why don't more people know about TradingView? Partly because the financial advice industry has a vested interest in keeping analysis feeling complicated and out of reach. If you believe you need a professional to interpret the markets for you, you keep paying for one. But also because TradingView does have a learning curve. It looks intimidating when you first open it. There are charts with lines going everywhere, indicators with names that sound like equations, and a sidebar full of options that most people click away from immediately. Quick note, this episode contains affiliate links. If you sign up to any product mentioned via our show notes link, Hidden Yield may earn a commission at no extra cost to you. We only mention products we genuinely use or believe in. If you want to try TradingView yourself, we've got a link in the show notes. It's an affiliate link, so Hidden Yield earns a small commission if you sign up at no extra cost to you. The free tier is worth starting with. That's the barrier, and it's almost entirely psychological. Give it 2 hours, genuinely 2 hours, and you'll understand more about how to read a stock or an ETF than most people who've been investing for years. Here's the practical breakdown. 4 things you can do with TradingView right now that your financial advisor probably hasn't shown you. The first one is building a watch list that actually tells you something. Your advisor might send you a quarterly update with some performance figures. TradingView lets you build a live watch list of every asset you care about. ASX-listed stocks, ETFs like VAS or NDQ, even your super fund's underlying assets if they're publicly listed, and see real-time price movement, percentage changes, volume, and relative strength all on one screen. You're not waiting for a report. You're watching the thing breathe. And you can set price alerts so your phone buzzes when something you're watching hits a level you care about. That alone is worth the $30. The second thing is using the screener to find ideas your advisor would never bring you. TradingView has a stock screener built in. You can filter ASX-listed companies by market cap, dividend yield, earnings growth, price to earnings ratio, revenue trend, and about 60 other variables. You can tell it to find every ASX stock with a dividend yield above 5%, a price to earnings ratio under 15, and positive earnings growth over the last 12 months. In about 40 seconds, it spits out a list. Your advisor has never done that for you. Not because they can't, because their job isn't to find you ideas, it's to manage what you already have and keep you comfortable enough to stay a client. The third thing is understanding what the chart is actually telling you. This sounds like technical analysis voodoo, and yes, there are people who take it way too far. But here's the stripped back version. Price and volume tell a story. If a stock is going up on high volume, that means real buyers are coming in. If it's going up on low volume, that move might not have legs. If a stock drops sharply and then bounces at the same price level 3 times, that level matters. Other investors are watching it too. TradingView lets you draw those levels, overlay moving averages, and get a visual sense of where a stock has been and where it might be heading. You don't need to be a day trader to find this useful. Long-term investors use this to decide whether to buy something now or wait for a better entry point. That discipline, buying the same quality asset at a better price is one of the simplest ways to improve your long-term returns without changing what you're invested in. The fourth thing is the Pine Script library. This one's slightly more advanced, but worth knowing about. TradingView has a built-in scripting language called Pine Script, and there's a massive open source library of strategies and indicators that other users have built and shared for free. You can overlay an institutional order flow indicator, run a backtest of a simple moving average crossover strategy on any ASX stock going back 10 years, and see exactly how it would have performed. Your advisor isn't backtesting strategies for you. They're not showing you historical what-ifs. They're managing a model portfolio and hoping the market cooperates. TradingView lets you ask harder questions. Now let's talk about the Australian-specific stuff, because this is where it gets genuinely useful for people on the ASX. The ASX has some quirks that TradingView handles well. Franked dividends are a big one. If you're screening for dividend stocks, you want to know whether those dividends are franked, meaning the company has already paid tax on those earnings and you get a credit. A fully franked 5% dividend is worth considerably more than an unfranked 5% dividend, especially if you're retired or in a low tax bracket. TradingView won't calculate your franking credits for you. That's not what it does. But it helps you identify the dividend stocks worth investigating further, and then you do that homework once on the ATO website rather than paying someone $200 an hour to do it. For SMSF trustees, TradingView is genuinely powerful. If you're managing your own super, you have a legal obligation to act in the best financial interests of the fund. That means you actually need to be doing analysis, not just hoping things work out. TradingView gives you a professional-grade environment to research the assets you're holding or considering. You can build a watch list of your entire SMSF portfolio and check it every morning in about 4 minutes. You can set alerts if something moves against you sharply. And you can use the screener to make sure you're not missing better opportunities sitting in plain sight on the ASX. There are currently around 600,000 SMSFs in Australia, managing a combined total of over $900 billion. The majority of those funds hold a pretty similar mix of ASX blue chips and term deposits. A lot of that is inertia. Trustees who set it up years ago and haven't actively revisited the portfolio since. TradingView gives you no excuse for that inertia. The information is right there. One thing to understand about TradingView's pricing. There's a free tier and it's genuinely useful for beginners. But the free version limits you to a certain number of indicators per chart and delays some data. The essential plan, which is the entry-level paid option at around $30 a month, gives you real-time ASX data, more indicators, and the ability to save your charts and watch lists properly. The higher tiers get more powerful, but for most people, Essential is the sweet spot. Try the free version first. Most people upgrade within a week. Here's the counter-argument you should hear. TradingView doesn't replace the value of a genuinely good financial advisor. If you have complex tax structures, an estate planning situation, insurance needs, or you're navigating something like a business sale or an inheritance, a real human with the right qualifications is worth every dollar. The problem is that a lot of people paying for ongoing financial advice don't have any of that complexity. They have a salary, some super, maybe a share portfolio, and they're just trying to grow their wealth without being ripped off. For those people, and that's most Australians who have a financial advisor, the value proposition of paying thousands a year for what an advisor typically delivers is genuinely questionable. The financial advice industry in Australia went through massive upheaval after the Royal Commission into Financial Services in 2018 and 2019. What that commission uncovered was decades of conflicted advice, fees for no service, and product flogging dressed up as professional guidance. The industry has cleaned up since then. There are genuine professionals doing good work. But the structural incentive problem hasn't fully disappeared, and the best protection against it is knowing enough to ask the right questions. TradingView helps you do that. There's also something to be said for the psychological shift that happens when you actually engage with your own money. People who passively hand everything to an advisor and look away tend to make worse decisions when markets get volatile, because they don't understand what they own or why they own it. When you've built your own watch list, when you've looked at the chart, when you've run the numbers yourself, you're a different kind of investor. You're less likely to panic sell in a downturn because you understand the context. And panic selling is one of the most expensive things an investor can do. All right, here's what to do this week. Go to TradingView, sign up for the free account, search for any ASX stock you currently own, just type the ticker followed by ASX, so Commonwealth Bank is CBA on ASX, Vanguard Australian Shares ETF is VIS. Look at the 1-year chart. Then the 5-year chart. Add a 200-day moving average. There's a button for that. Look at where the price is relative to that average. Then open the screener and filter for ASX stocks with a dividend yield over 4% and see what comes up. Spend an hour in there, just exploring. That 1 hour will teach you more about your own investment universe than most quarterly advisor reports ever have. The game hasn't changed. The markets still reward patience, diversification, and buying quality at a reasonable price. What's changed is the information available to ordinary Australians who are willing to spend $30 a month and a bit of time learning how to use it. The advisors know the tools exist. They're just counting on the fact that you don't. That's Hidden Yield. More every week. Find everything at hiddenyield.com.au. Quick reminder. Everything you just heard is general information only, not personal financial advice. It doesn't take into account your personal circumstances, objectives, or financial situation. Always chat to a qualified, licensed professional before making any financial decisions. Now, go get more. hiddenyield.com.au.